The big risk with this company is the whole AI, right? So if AI makes essentially tax and basic tax stuff basically free for everybody, that's where they could lose a lot of their growth. But I think numbers right now doesn't clearly reflect it. Valuations are on the lower side as well. So I think it's good, especially for if you're just trading the stock, right? So build a free tax trading tool. It's good. New revenue streams from advanced AI. Yeah, this is just that biggest risk and that's what affecting a lot of software stocks, right? If AI is going to pretty much disrupt a lot of the growth for these companies or even make things obsolete. So the big scary thing for stuff like this with taxes, if AI can pretty much get to a point where everyone's just utilizing AI to essentially file for their taxes instead of doing it through Intuit. SC. Yeah, so that's just it is the risk with an Intuit right there. I think it's good for a trade, but I don't think it's a solid longer term investment. So like I said, you find yourself up 2-3% from these areas for the technical setup. You don't hold this position for crazy gains or hold it for long term. You take what you can get from the stock as more of a trade, right? So it's good risk to reward, especially if you initiate a buy here and DCA into it to see if you can squeeze out what you can from it. But longer term, there is that risk. SE. SE is around 30 PE on the higher side of the PE here. Great upside for intrinsic value. Great upside for Wall Street, covered by 19 analysts, right? The biggest thing to note for SE and why it seems really compelling is Stanley Drunkenmiller bought this company here, and he's down 31%. So you guys don't know who he is. He pretty much averages. He does not. He's probably one of the few hedge funds that are never not positive. So he's always plus 20, 30% for every year. So he's very proven, very strong hedge fund or super investor. So following someone like him, especially when he's down 30% and he doubled down, he bought 244 percent, it's probably a good idea, right? So why? The company's growing at 38%, trading at around a 31 PE. It is trading roughly where it typically trades at, right? But it has areas where it grew, where it was trading at crazier valuations. SE here, and you're sitting at golden. So this is your setup, right? Sitting at golden. Don't have a lot of dark pools that are buying it. So that's not what I like to see, but this is a technical setup on a fundamentally strong stock with an average price target of around 186.